Hello, I'm Haley Gaffner, and I will be pitching Jamf Holding Corp, traded on the NASDAQ exchange, ticker JAMF. Jamf offers a variety of cloud-based Apple-focused IT management solutions tailored to enterprises, schools, and government agencies. The company recently entered the telehealth management market. Jamf operates primarily in three segments: subscriptions, being 78% of fiscal year 2019 revenue, licensing, 12.7% of revenue, and services, being 9.3% of revenue. Jamf is moving more towards a subscription revenue business model as the software as a service cloud-based solutions have become favored among their users. The company was founded in 2002 and is headquartered in Minneapolis, Minnesota. Jamf just completed their IPO in July of 2020, and currently they are the only vertically focused Apple infrastructure and data management software on the market today. The company offers a unique Bring Your Own Device (BYOD) program that allows for complete customization of IT management, and in addition, customers are able to remotely set up and manage their devices prior to users even opening the box on a new product purchase, making the software zero-touch. Jamf has 40,000 customers and is managing nearly 17 million devices in over 100 different countries and territories. The devices Jamf manages equate to about 1% of Apple's current installed base. Jamf's online platform, Jamf Nation, has nearly 100,000 IT professionals. The primary purpose of the platform is to allow users and prospective customers the ability to share and answer each other's questions, as well as ask advice from professionals. The company saw impressive growth in the past year, growing revenue by over 39% year over year and expanding gross margins by more than 10% in fiscal year 2019. 36% of their revenue is organic, while 3% is from their acquisition of ZuluDesk for $38.6 million. ZuluDesk enhanced Jamf School and brought over 6,000 customers. Apple has been Jamf's customer since 2010 and a channel partner since 2011, which was when Apple began to resell Jamf's educational software in their retail stores. Since 2014, the company has partnered with Apple to develop and improve solutions as well as offer go-to-market events as part of Apple's Mobility Partner Program. While this partnership only accounts for 1% of revenue and 6% of bookings, it gives Jamf the expertise and leadership in the industry to offer customer solutions that best fit their businesses and fill the market demand. Given the reliable partnerships, customization of software, and a pathway for growth, it is recommended that Jamf Holding Corp be added to the AIM Equity Fund with a price target of $44.44, representing a potential upside of over 31%. Now moving on to my drivers. Apple's globally growing market share. In recent surveys by Canalys and Gartner, it appears as if Apple is regaining some of their lost market share globally in smartphones and personal computers. Jamf's revenue is driven by Apple's devices as demonstrated in fiscal year 2019, when devices managed to increase by over 30%. Annual recurring revenue, ARR, grew by 47%, raising the average ARR per device $14. Canalys reported that globally Apple smartphones increased from 10.8% market share in Q2 of 2019 to 15.8% market share in Q2 of 2020, increasing to a total of 45.1 million shipments. In addition, Gartner estimated that Apple's global personal computer market share went from 6.6% in Q2 of 2019 to 6.8% in Q2 of 2020, equaling 4.6 million units. In combining these surveys from Q2 2020, there were over 50 million Apple units shipped. If Jamf can capture an additional 1% of these Apple devices, the company could generate nearly $7 million in incremental revenue. Given the company's scale, Jamf is well positioned to tackle this opportunity. Moving on to my next driver, education and enterprise total addressable market. Enterprises and schools have become more receptive to adopting and embracing Mac OS and iOS technology. In addition, by a survey by IDC, it was discovered that Macs only make up 11% of the business market share. However, the Mac market share is expected to grow to 14% by the end of fiscal year 2021. Assuming the enterprise market is 50 million professionals and Jamf can penetrate 14% with each Mac device costing $116, including Jamf Connect, Pro, and Protect. Then the total addressable market opportunity is $8.1 billion. In addition to tackling the enterprise TAM, Jamf has an opportunity in the education market. Apple currently has 20% of the market share of devices used in schools. The adoption and improvement of the iPad is expected to expand market share to 30%. According to the 2018 census, there were 81 million in education. If Jamf can penetrate 30% of the education market with each device costing $9, then this roughly totals $220 million in opportunity. Both of these opportunities combined total a TAM of $8.3 billion. Moving on to my last driver, expanding margins. Jamf is relatively new to the market after their IPO in July, but the company's margins are rapidly improving. In Q2 2019, the firm's gross margin was 60%, but by the end of Q2 in 2020, it had improved to nearly 68%. This expansion is beyond what other firms in the industry following their IPOs have accomplished. The industry average for the gross margin is 66% 1 year post-IPO. Mature companies in the industry are seeing gross margins of 73%. Jamf is not showing any signs of slowing down and is on track to reach the average industry gross margin. The improvement in gross margin should have a trickling effect in expanding EBIT and net income margin. Moving on to my evaluation. In order to reach an intrinsic value for Jamf, a 10-year DCF model was constructed. Using a terminal growth rate of 1.75% and a WACC of 9.2%, an intrinsic value of $40.20 was reached. A sensitivity analysis of the terminal growth rate and WACC ranged from $37.87 to $46.91. Additionally, a price to sales multiple valuation was calculated, resulting in a multiple of 18.9 times, an intrinsic value of $71.54. Finally, an EV to sales multiple valuation was conducted using a blended average of EV to sales multiple of 18.5 times, resulting in an intrinsic value of $46.37. By weighing these three models 70, 15, 15, a price target of $44.44 was reached, resulting in a 31.55% potential upside. Jamf does not pay a dividend. I'd like to touch on a few risks. Apple announced the acquisition of Fleetsmith, a small startup, in June 2020. Fleetsmith is a mobile device management MDM partner that has been used in small businesses and retail. Fleetsmith competes with Jamf's Jamf Now subscription. While Jamf Now only accounts for 3% of recurring revenue, Fleetsmith could scale up their capabilities and adversely impact Jamf's revenue. The next risk I'd like to touch on is competition in education. 86% of students in the United States attend public school. Apple provides products to an estimated 20% of students in public schools. Apple's premium prices have given Google's Chromebook the upper hand in education. If Apple fails to keep and grow in the education market, the company's long-term growth could be at risk. The last risk I'd like to touch on is data security. Jamf prides itself in being able to offer a solution that protects private information and has yet to have a data breach. However, as more customers are choosing the cloud over server solution, data security becomes an issue. Lastly, I'd like to touch on management. Dean J. Hager is the CEO and has been with the company for 5 years. Dean has more than 30 years of experience in the software industry and was CEO at Kroll OnTrack prior to Jamf. Jill Putman is the CFO and has been with the company for 6 years. She was formerly the VP of Finance at Securing Computing. I believe that Jamf Holding Corp would be an excellent addition to the AIM equity portfolio because of its customization with the options of solutions. It fills a gap in the market and it has a pathway for growth. Thank you for listening to my presentations, and please feel free to participate in the Q&A.